Nick, what are we talking about today?
Yeah, so today we wanted to give our investors an update of across the Munro funds as we head into the end of the financial year. A lot has changed this year. There's a lot of cross currents and a lot of exciting things happening in growth equities, and we wanted to take this opportunity to update you as to what we're doing with the funds at the moment.
And what's the first thing that you want to talk about?
I want to talk about AI. We think AI is a really, really big deal. I understand some people think this is hype and that this is a bubble. We would beg to differ. We think this is a really big deal. We have been talking about AI here at Munro Partners for a very long time. We talk about it within our high performance compute area of interest, and we talk about semiconductor companies. People have heard me talk about ASML being the biggest company in the world, or sorry, the most important company in the world that no one's ever heard of. NVIDIA potentially being the biggest company in the world. And what actually happened this year is quite important. And so as we came into this year, AI had been around for a long time. AI was in your, it was in your how you did your predictive shopping. It was in, how Netflix predicted what you wanted to watch. It makes TikTok see what you want to see in terms of your TikTok stream. But a big thing changed, which is ChatGPT came out over Christmas, and effectively OpenAI proved that large language models could work. That was very exciting if you wanted a poem written about you, which my kids would do. But it became much more exciting when Microsoft effectively went all in on integrating AI into all of their products, be it through Copilot or through a number of their other products that they're doing. And that of course forces Google to follow, forces Amazon to follow. And effectively now today, you have ChatGPT being the fastest growing app in history, and you have every major corporation having this conversation within a boardroom. And so what this does is it massively accelerates our investments around high performance computing or semiconductors. And so from our point of view, we've talked for a long time about the fact that these companies, these semiconductors are effectively designed by NVIDIA through accelerated computing. Accelerated computing allows these AI models to work. There are only two companies in the world that can design these chips, and that's NVIDIA and AMD. NVIDIA actually has a 75% market share today. If you then move up the stack from there, there's effectively only one company in the world that makes the foundry for these chips, and that's TSMC. And then one company in the world that makes the tools that helps TSMC make these semiconductors, and that's ASML. On top of that, we've added some investments around EDA tools, etc. So we've moved the high performance compute bet in the fund from roughly 10% at the start of the year to 20%. We did that in February, around the time that Microsoft announced they were going all in. And we think we're going to be talking about this for a long period of time. And so from our point of view, this has always been an exciting area. We think that fourth tectonic shift, that acceleration into AI is now happening. And so we wanted to take advantage of that.
So you talked about AI being just hype, but how does this event differ from other fads such as the metaverse?
Yeah, so from our point of view, it's easy to tell, if you go back in time, if you think about, you can tell the difference between what's hype and whether it's not hype as to whether you actually use it, okay? So everyone remembers the iPhone moment when they sat at a dinner party and saw someone using an iPhone and said, geez, I really want one of those. That created the third tectonic shift in computing, which effectively doubled semiconductor demand through that period. And that was the mobile era, that was iPhones. And that created the biggest company in the world being Apple. Since then, you had things like the metaverse come along, which were exciting, but no one on this video actually ever went to a meeting in the metaverse and probably won't for a number of years yet. Cryptocurrencies came along and everyone bought some, but no one watching this video has actually used a cryptocurrency to buy a physical good. But everyone on this video has interacted with AI already. They did it through those products I talked about earlier, but they've also interacted with ChatGPT. And they're excited about these products that are coming, that are going to summarize meetings for you, or that are going to help these productivity tools that are coming. And so from our point of view, Jensen Huang has said this is the iPhone moment for AI, and we agree. It's the iPhone moment, the AI, because as I said, every company in the world is looking at how they can use these products. I'll just give you one example. A pharmaceutical company we met on our recent travels is building their own large language model to sit on top of their pharmaceutical company. So it's Sanofi. And what it does is it goes and looks at everything that company's doing in every part of the organisation and uses that data to feed it up to their staff. So it's not using the internet, it's using their own data. And that's a really interesting development, because ultimately you can say, when have I used this protein to do this? And it's actually that, then the customers or the employees there can use that data to help do things better. We think every corporation in the world is going to want to invest in this technology. And everyone we're speaking to is thinking about investing in this technology, and so that's why we think this is a big moment.
So beyond semiconductors, who else is likely to benefit from this trend?
Yeah, so the other big beneficiary, semiconductors are effectively the shovel in the boom, and this is something we've detailed significantly. Please go to the website and look at it. It's just now finally happening. They are the shovels in this boom, and they're effectively the easy investment here, because everything that involves a large language model involves roughly 8 to 10 times the computing of, say, a search query. That's a lot of compute power required. That ultimately means people buy a lot of semiconductors to build more data centers or more accelerated data centers. On top of that, the other big beneficiaries are clearly the cloud providers, because everybody who wants to build these applications, that pharmaceutical company I told you about, or Microsoft with its Copilot, or Adobe with its Firefly, or Salesforce with Einstein, is going to have to host it in the cloud. And so all that compute work is such a large amount of compute, it needs to be hosted in the cloud. And so the other big beneficiaries are the big cloud providers. There are only 3 on the planet today. That is Microsoft, Amazon, and Google. And so again, like high performance computing that we've lifted dramatically through February and March, we have lifted our investment in the cloud providers dramatically, because they are the other shovels in this boom. And again, we did that, as I said, through February and March.
We can't talk about AI and not mention NVIDIA. You were actually just there recently. What did you learn?
Yeah, so what's interesting about all of this is in February when we were doing this, we thought that this would be big, but we weren't 100% sure. And then through February and March, these stocks started to do well, but then in May, we got confirmation that this would be big. NVIDIA announced their results in May, and they saw a huge uplift in demand for GPUs, for accelerated computing, which is the key tool within this AI boom. Consensus has had to upgrade their NVIDIA earnings forecast by roughly 80%. That's not 80. For a company that's the top 10 company in the world. It added 250 billion in market cap in one day. And it's now cheaper today than it was the day before. So from our point of view, that's just massive confirmation that this is really happening. I personally was in the company's office a week ago. We also saw Microsoft on the same trip. We saw AMD on the same trip. We saw all the semiconductor providers. And they're firmly of the view that this is just the beginning. Microsoft has 600 people on trial for Copilot today. They're rumoured to be charging them 40% more for use of that product. NVIDIA is very much of the view that this is just the start of this trend. And while these stocks are probably going to get ahead of themselves periodically, because it is a very exciting time, we do expect you're going to continue to see earnings upgrades from these companies all year. And NVIDIA personally believes they're at the start of a 3 to 5 year investment cycle.
And let's talk about fund exposure. Can you talk us through the change from the start of the year and what this all means for the 3 key signposts that you've been tracking?
Yeah, so obviously this means, this is obviously a big change. We came into the start of the year basically saying there was 3 signposts we needed to see ticked off before you got to the end of the bear market. The first was that we needed to see interest rates peak. We think that's happened. It happened last October. The second is we thought a bear market would have to last on average about a year. By January 1, it had lasted on average about a year. The thing we were worried about, and still, and I still think a lot of people in the market are worried about, is earnings downgrades. Clearly rates have gone up and earnings need to come down. What's changed here is that because of this accelerated shift to AI, in one particular area of the market, the earnings upgrades have already started. They've already started for the cloud providers and they've already started for the semiconductor companies. Or even if they have a small downgrade still to come, the market can see across the valley to see that the upgrades are coming. And so having done all this work, we decided to move on that, and we decided to move in February and March. And that meant our exposure is lifted fairly dramatically. The second thing that's important to flag in the rest of the fund is that China reopened a lot faster than we thought. That was very good for some of our luxury good investments. And again, you can see across the valley. And there's a couple of other specific areas that we've added to. And so what we've essentially done is lifted our exposure. We've lifted our exposure back to levels that we would have in a normal market, roughly 80-90%. We did most of that work through February and March. And you can see it quite clearly in fund performance. All of our funds are up more than 10% in the last 3 months. And so from our point of view, we think you're basically at the point where normal service is resumed. We're not saying that there mightn't be other issues out there, and we are still hedging for that, but it does feel like we're getting very close to the end of this bear market. From our point of view, the 3 signposts are tick in a lot of areas of our funds, i.e. rates have peaked, they've been through this big adjustment, and they're back into earnings upgrades modes. And as we all know from every video I've ever done, stocks follow earnings in the long run. If their earnings are starting to move up again, then we should lean into that and take more risk. And so that's what we've been doing since the start of the year.
And we've got plans to head around Australia to see all our clients in August. What do you plan on talking about during that trip?
Yeah, so from our point of view, it's obviously been a difficult 12 months for growth equities. We do think, considering some of these developments that we think are fairly major, that 12 months has probably come to an end. As NVIDIA has told us, you're actually just at the start of this. You're just at the start of this. I understand stocks are gone up a lot and they may get periodically ahead of themselves, but this is the start of the next big investment trend. AI is one of them. We have a number of other ones to talk about, but most importantly, as I said earlier, stocks go back to following earnings. And we're really looking forward to coming back on the road in August to tell you about some of these good ideas that we've got and hopefully continuing the good run of performance that we've been recently having.